Coming up on Market to Market, farmers face more hurdles as they head into the field. A grocery store keeps a community from turning into a food desert. And commodity market analysis with Chris Robinson next.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, April 3 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The president addressed the nation Wednesday night on his action in Iran. The conflict has dominated news and economic headlines for a month and is starting to show up in economic reports. We are recording this program hours before the latest job numbers and unemployment rate due Friday morning. Both figures are expected to start seeing some influence from global events that have taken place over the last 5 weeks. We did learn this week February's retail sales were up 0.6%, according to the Commerce Department. Shoppers returned to the stores for cars and clothes after staying back during a wintry January. These figures are missing immediate impact from the war with Iran. AAA reports the national average for a gallon of gas is $4.08. Input prices have also spiked, leaving those left by to secure fertilizer with higher bills to pay. The National Corn Growers Association and National Association of Wheat Growers urged the Department of Commerce and the U.S. International Trade Commission to revoke duties on the imports of phosphate fertilizer. As final preparations before planters roll across the field, farmers are dealing with several obstacles. Here's David Miller.
On the cost side of things, we already had very high costs, and that's been our big problem. We've been under this cost squeeze for several years. But now with fertilizer prices rising, with the uncertainty, and also fuel prices rising, that creates additional concern. Now,
Grant Kimberly is the Senior Director of Market Development for the Iowa Soybean Association. Those uncertainties he's talking about include a war with Iran that is starting its 5th week. The pressure is adding to already expensive inputs, land, labor, and capital.
Now, fortunately, most farmers probably had some of these costs locked in earlier this year, mostly. But if this lasts longer, this could have an impact. And there's going to be some areas where maybe these costs weren't locked in. So just going to depend on individual situations and where you're located at.
The Iowa Soybean Association, funded in part by checkoff dollars, advocates for Iowa's 37,000 soybean producers facing one of the toughest spring planting seasons on record. Kimberly is one of those producers. He also grows corn in the state that produces the second largest output of soybeans.
No, we're still in a very challenging economic environment. Last year was probably the worst it's been in quite a while. This year, it looked like we were starting to turn the corner and come out of that a little bit, but now you have the other uncertainties on the cost side of things.
The Strait of Hormuz, the pathway for 20% of the world's oil, 50% of its nitrogen, and 40% of its phosphorus, has been too dangerous to traverse for more than a month. Over the course of the war, the price for anhydrous is now 25% higher, and urea is 40% higher than a month ago. The increased cost may have some farmers switching crops. The higher price might also have some producers cutting back on inputs that could cause reduced yields. Kimberly doesn't think that will be a problem here at home.
I think it's going to be more pronounced in other parts of the world than it is here in the U.S. because we're a little bit more self-sufficient on some of these things, and we're a little bit earlier in our planning production cycle window than they might be. But if this would continue on longer and those cost impacts would continue longer, places like South America might see impacts.
A little relief may come from recent changes to the renewable fuel standard that increased the annual production of biodiesel and renewable diesel to more than 5 billion gallons annually, an increase of more than 60%. Kimberly is also the executive director of the Iowa Biodiesel Board.
Once we get the final rule of the 45Z biofuel production tax credit program, it's another piece of the puzzle. Once that's finished, that'll help, I think, further incentivize additional production of domestic biofuel feedstocks and make more available to the marketplace.
For Market to Market, I'm David Miller.
The old general store served many purposes, most of which involved selling goods and services across an area easily reachable by horseback, but also as a place for card games and conversation. The evolution to the pickup truck allowed the meeting each morning at the cafe, or as in the case of Gowrie, Iowa, the grocery store to handle the day's social agenda. The store also serves as a vital role for the community, helping avoid becoming a food desert. Producer Pat Boberg put this story together originally for the Iowa PBS program, Iowa Life. Here's Charity Nebbe with our cover story.
In Gowrie, for more than 30 years, farmers, lawyers, bankers, and more have been meeting every morning to have coffee and play a simple game.
We call it the numbers game. And I have a notebook here, and I write down a number since I run the show. The numbers determine how many people actually show up. So if there's 6 of us, I pick a number between 1 and 600. And we start from the previous day. Whoever got stuck the previous day, we start with them.
666.
6. And then we go around.
781.
The numbers keep getting narrower and narrower.
805.
And then somebody will pick the number I picked, and they get stuck.
799. Thank you, Burger.
When you get stuck, you can give me the money and everybody's coffee. If there's 12 of us, you have to pay $12.
While this long-standing tradition may have thinned local pocketbooks,
Here it is, $12.
the winners have fortified community institutions, including the grocery store that hosts the crew.
So they meet every morning from 7 to about 9. We give them a place to sit and have their coffee, and they give it back to us tenfold.
And at the end of the month, the money goes to Heartland Bank, put in a special account. Then money is given out to usually the grocery store, roller rink, pool, whatever needs, we feel fit to give to.
There's always been a store in Gowrie. That's something that we often take for granted. But yes, in a small town, it is crucial to have, and it is hard as heck to keep open.
Founded in the mid-1800s, at one time, Gowrie had 3 grocery stores as 4 separate train lines stopped in town. Today, only Market on Market remains. And after being a family-run business for more than half a century, the fate of the store became uncertain.
Jeff Peterson had ran the store from about 1986 to 2018. Before that, his dad ran the store, Jamboree. They did sell it to a different individual who had a chain of stores, and that didn't last very long. So from 2018 to 2019 is when we started to see things trend down. We saw trucks weren't coming in. We weren't getting the milk, the bread, the eggs, the produce. All signs were pointing towards closure.
Without its grocery store, Gowrie is what the USDA calls a food desert, or a community with limited access to affordable and nutritious food. First recognized by the federal government in 2008, food deserts are found across the United States, in big cities to small towns.
So for Gowrie, having a grocery store, it is so important because there is no other grocery stores within a 30-mile drive. It's a 30-minute drive to get to Fort Dodge. It's a 30-minute drive to get to Jefferson. It's a 30-minute drive to Ogden. So we're kind of the center of this radius that does not have access to a grocery store.
Gary's about 1,000 people. There's people in town that they can't get to other grocery stores. There are a lot of times they're older people and they don't get the whole online thing. And this is a place for them to come and they meet their friends and they shop and they laugh. And, we try and make it as welcoming as we can.
So when we determined that we could potentially be next, and we started getting involved in how do we save our grocery store. The timing was so short that we were really concerned we wouldn't be able to find a new buyer. So that's when we decided we needed to go to the community.
In early January 2020, community leaders held a public meeting in front of a standing room only crowd. More than 150 people showed up to learn a new buyer was unlikely to be found, and keeping the store open would require community support. With a shutdown weeks away, the town would need to form an LLC and raise $250,000 to buy the building, equipment, and stock the shelves.
We were very clear that that was not necessarily going to be a money-making situation. It was to keep the business that we have open.
It's for profit, but we're not making a huge profit. We were very straightforward with them and said, this is not a investment that you're going to see a return on.
But I think a lot of people were very happy about the idea that I'm investing in the future of the community.
9 days after the initial community meeting, 60 people came forward to donate to the cause and officially become the new owners of the soon-to-be-named Market on Market grocery store. In just over a week, Gowery went from the brink of becoming a food desert to raising $250,000 and saving a town staple.
It was right after we purchased the store. I was working here late at night trying to get things cleaned up, and I had a call from my youngest daughter. And she said, did we do it? And I said, do what? She said, did we save the store? And I said, we did it.
Yep, there. What was that?
Half a decade later, Market on Market is still open. However, the store's success required federal grants, zero-interest loans, and surprisingly, Gowery being recognized as a food desert allowed the store to partner with a nonprofit fundraising arm, which has made the store viable.
Without that fund, we would have been closed a long time ago. We've had over $100,000 given to that foundation that we've been able to replace our roof, our heating. We've been able to update our point of sale system. We've received over $15,000, I think in the last 3 years from the coffee guys.
And the grocery stores needed help, and we have given them a lot of money over the last many years. We enjoy doing it, and everybody has fun. It ain't fun when you get stuck and you have to pay, but there's guys who've been playing for 30, 40 years. And it's kind of a cool thing that we like to do.
Next, the Market to Market Report.
USDA's Tuesday report revealed a shift in acreage intentions as more corn acres are expected to be planted as farmers move away from soybeans and wheat. For the week ending April 2, the nearby wheat contract lost 7 cents and the May corn contract fell a dime. The 800,000-acre change jolted the soy complex. The May soybean contract added 4 cents, while May meal weakened by 10 cents per ton. May cotton was up $1.46 per hundredweight. May Class 3 milk futures gained 59 cents. The livestock market was mixed. June cattle improved $7.55. May feeders put on $10.79. And the June lean hog contract sold off $1.65. In the currency markets, the U.S. dollar index shed 18 ticks. May crude oil added nearly 13% or $12.63 per barrel. COMEX gold strengthened $157.50 per ounce, and the Goldman Sachs Commodity Index was up by more than 5 points to settle at 738.66. Here now to lend us his insight on these and other trends is regular market analyst Chris Robinson. Hello, sir.
Paul, good to be here.
Let's talk about that report from Tuesday. We'll get to stocks in a minute. Let's talk about those acres. Really had an impact on wheat because of less. To the point, we're looking at the lowest acreage on overall since 1919. Spring wheat, lowest in 56 years. It was significant enough for a jolt the first day, but why not a continued run?
I think that a lot of these things were already baked in. We'd already had a pretty good rally to one-year highs in that market, in the wheat across the market. And it's kind of a buy the rumor, sell the fact. But I really think that the markets are really whipsawing more so with what's going on with the crude oil. That's the one dominant market mover right now for these grains, because I don't think that we'd be where we are regardless if we didn't have $111 crude oil, right? Because we were at $50 and we were near 5-year lows. So I think that a lot of that was baked in. And honestly, it's not surprising that we have less acres because we were at 5-year lows. And, people were very concerned. But back, Christmas time, January, things were looking pretty dismal, So this rally has been a blessing for a bad reason.
If you sold on this rally, are you one of the few that sold on an upside, or is there still potential for a little bit of a run?
There's absolutely, nobody knows what's going to happen this summer. Think back to 2012, we drifted lower into May, and it was very similar. We didn't have the issues with crude oil and the war in Iran or anything, but we did drift lower, and then once that final acres came out in June, and then we got to weather. So there's always that what if, is it going to be there? I don't know. I look at this rally that we've had, certainly with new crop corn, wheat, and beans. You have 1-year high in new crop wheat. You had 22-month highs in new crop corn and beans. That was a gift. And it was all driven by this rally in crude oil. So if that is sustainable, I don't know. If we do get a weather market, absolutely positively, all bets are off, just like it always is. So yeah, if you've made sales, I would absolutely re-own them, or at least re-own half. You want to be in a situation where you have seller's remorse, because while it's nice to sell corn into a 53-cent rally, and we had a $1.20 rally in soybeans, and that's a lot of revenue to turn your nose up at. You don't want to be in a situation, 3 months from now going, nobody told me we were going to have a drought. So keep your upside open, but take advantage of it.
In that corn market that you're referring to, the new crop, let's talk old crop for just a quick moment. What did the stocks report say, and did that have any influence?
We're well supplied, and there was nothing really surprising. In fact, the $9 billion for corn and $300 million for the soybeans. We don't have a supply issue. Now, the demand is excellent for corn, right? That's been a blessing. We've had really, really good corn demand, and it's one reason that we've had, made corn sit where it's at. If you look at the rally we had in May corn, we hit from the January low. Remember the January USDA report, how dismal that was? I mean, we broke 35 cents basically in 2 days. That was the stone cold low, little did we know. So we had a 50-cent rally in that May contract. And then, as of Wednesday, we came back down. We've given back half of it. And a lot of that volatility, the up and down, is you'll see we rally with and break with the crude market. So very, very sensitive to that. Again, I think it's a blessing in disguise. It's certainly, it's not something a lot of people predicted. If I told you in January, don't worry, we're going to get a 50-cent rally because crude oil is going to $100, you'd have looked at me like I was crazy.
Well, I don't think you'd have been invited back had you said something like that, because that would have really been, of course, the crystal ball, we don't know.
Right.
But let's, for a moment, on corn, new crop, this fertilizer story that we talk about. How much does the average farmer have pre-booked, and is this really impacting a farmer who, how many already had stuff sold or delivered even?
Yeah, a lot of the fertilizer goes on in the fall. So this is before the spike had happened. And I'd say that probably 85% was already, the fertilizer's already down. Now, for the guys that didn't plan, or they're smaller, or they waited, they're going to have to make a decision. Are they going to pay up or not? If not, they're probably going to shift acres to soybeans. And, when we had the initial idea about what we were going to plant for acres this year, the consensus theory on all the experts was that we're going to have a lot more soybean acres, right? Because $11.50 beans work a lot better than $4.30 corn. And so I think that was the one surprise, is that flipped, that we got more corn acres coming and less bean acres. I think that was probably surprising.
And this is a farmer survey. This is not economists speculating. These are farmers responding. So there were some farmers putting doubt on these numbers, but it was them who responded. Tell me, though, why such a big change? 800,000 is a big number.
It is, but I think at the end of the day, my experience working with farmers now for the past 16, 17 years, and then trading before that on the floor for 20 plus years, farmers like to plant corn. If they can find a reason to plant corn, they will plant corn. It's just their preference. So we'll see. The proof's in the pudding. I don't think you're going to see lots of times when this USDA report comes out, you'll get people screaming from the rafters. I don't think that this was a report that drove that. I think in general, the bottom line is we're well supplied. Thankfully, we've got excellent demand. So if we do get a weather premium this year, or if we get if we have continued excellent demand, anything can happen. But I think in the grand scheme of things, to have gotten a 50-cent rally like we did, and even we're holding on to a chunk of it, even as you and I sit here and talk, it's a better place to be, because we were really, at least I was, concerned about possibly much lower corn prices, 4 months ago.
And beans, what you were kind of talking to at the end. I want to get quickly to cotton for a moment, because that has all of a sudden put together 5 out of 7 days looking good.
1-year high prices. It's interesting, it caught everybody the wrong way. The managed money, who everybody loves, we watch it every week because you want to see which way they're betting. They had a massive record short bet. They were short over 80,000 contracts. They were completely wrong. They started buying it back, but it's really hard to buy back 80,000 contracts in a thin market like cotton. So the blessing is we went from worried about sub 60 cent cotton with new crop to 75, 76 cent cotton, which granted, it's not the dollar everybody wants. I know it's not good enough. I always have people tell me that's not enough, it's not enough. But it's a blessing, and we'll see, because we were really thinking that a lot less acres of cotton would have been planted, especially if they could have switched to beans, because 11, 20 beans make a lot more sense than sub 60 cent cotton. So it is a blessing. How long is it going to last? I don't know. A big part of the rally was because the speculators, who everybody loves to hate, they had it wrong, and so their pain was the cotton producers' gain.
You can use cotton to answer this question if you want, though, but Bradley in Nebraska wants to know, when does the war premium exit the corn, bean, and wheat markets? Was Wednesday's sell-off the report related, or risk off before a 3-day holiday weekend instead?
I think a lot of people thought that the president, when he spoke last night, was going to say something different, maybe a little bit more dovish, and maybe it was over. And I think people were anticipating that because, again, a big part of this rally in all of the row crops has been because crude oil was at $55 on December 15th. And of course, March 9th, we sparked up to 120. We finished the week here at 111. I think that's going to be, I know it sounds crazy, but that's probably the bigger driver than anything else. And yeah, we do have this holiday weekend. We'll see what happens. I mean, Sunday night, there's going to be a lot of people sitting in front of that screen chewing their fingernails, because it's going to be, what is happening with this crude oil market. So I think it was a little bit of risk off heading before the long weekend.
Let's go to live cattle, where the screwworm has possibly emerged as the rumor and the whisper. Is that the big driver?
It's interesting. We had an $85 sell-off, and then we've clawed it all back. We're back to contract highs. We had a $40 sell-off in fat cattle. Now we're making new highs in the June cattle. So the market that everybody thought had been broken because of whatever, there's a million different reasons, it's all come back. At the end of the day, we don't have the supply that we need. The packers, the math is, they're back in the black. The cash market, although it had a little weakness, continues to show up. And I think the one disconnect that I was surprised of, and I'll tell you, we had a 10% correction in the stock market, roughly. And that we had a little bit of a sell-off in the cattle along with it. But cattle has now almost disconnected from the stock market. This last 2 or 3 days, it's been amazing to see the strength. And I'm interested to see where it's going to continue to go. But we've been through this before, where it gets very, very, we're at all-time highs. When the correction comes, it's very, very severe. So this is a kind of a mulligan for everybody. If you feel you missed the high before the last break, this is a gift.
Cattle best since October, feeders best since February.
Yeah.
What else is headed in for feeders?
I even think that if spot corn stays roughly where it is right now, that's not going to be an issue. I think as long as the packers are continue to be in the black and that market holds in there. The big question is this. You led in with talking about, are we going to get a recession? If we have, expensive gasoline for months and months and months, will people say, you know what, I'm done paying for expensive beef? We've been hearing that narrative for 3 or 4 years now. When is the consumer going to say no more, no more? They keep showing up. So that's been, I think, surprised a lot of people. I would continue to watch that as well. Is the consumer going to continue to pay up for beef if this continues to go on for, another month or 2 or 3?
And we will hold your comments on the hog market until Market Plus. Sorry, I ran out of time because I wanted to ask you about lots of things. Thanks, Chris.
Thank you, sir.
Chris Robinson, everybody, and you've been watching the analysis portion of this program. And in a moment, we will continue our discussion in an online-only segment. Find it by searching Market Plus with Chris Robinson wherever that you get your podcasts. You can also go to our website of markettomarket.org to listen. Now, we've done our part to make your YouTube presence and experience greater by subscribing to our YouTube channel. Thank you so very much for that. There's still room to join in on being the first to know when this program is ready to view, as well as individual stories and the MTOM podcast. Subscribe now at youtube.com/market-to-market. Next week, an extended look at the livestock market navigating drought. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.